My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Everybody, welcome to my trading game plan. Of course, I am Gareth Soloway here, Chief Market Strategist at VerifiedInvesting.com. Now, we have a lot of charts to go over today. Before we do that, let's talk about today's action. So again, at 2 p.m., the Fed will release their policy statement. No interest rate is expected, not even a slight one, right? Ultimately, it's going to all come down to Jerome Powell's press conference at 2:30 p.m. Eastern time. What's going to happen in that respect, we're going to find out, but I do think the markets will be on edge considering what is going on, and kind of we're getting to the end of his tenure. Like, will he say he's going to stay on the Federal Reserve Board even as not being the chairman? And again, that would be a rebuff to the president, who wants him off so he can appoint someone who is dovish, not only to the chairmanship, but also to the board, and vote for more interest rate cuts. So this is a big meeting, not because of interest rate changes, but because of what Jerome Powell could say. Then after that, in the after hours today, Microsoft, Meta, and Tesla will report earnings. That will really be the hardcore mega cap players that will drive the markets tomorrow. And sure enough, as we turn over to charts, we will look at charts that are at major pivot points. It's amazing how we come into a Fed decision and these mega cap earnings, and literally the NASDAQ has retraced to a major level. It's either going to blow right through it to the upside or going to get a massive rejection to the downside. Let's take a look at the charts here. The S&P 500 right here. This was yesterday's price action. Overnight, we floated up. Then we've kind of faded just a little bit here as we head into the open, but we are still net positive. This is where we closed yesterday. So you can see the S&P 500 is up about 20 to 24 points going into the opening bell. Now, flipping over to the S&P daily chart, this is where it all comes down to it, right? So here we have a trend line that goes down. In fact, I'm going to flip that color so it even pops more. We're going to go to white there. This trend line goes back to the April tariff sell-off lows of 2025, and we obviously see how it's converging with this area right up here. And so essentially, notice how we're at a pivotal level here as well. All right, not only do you have the white trend line, but then you have the bigger parallel that has marked the major lows and the major highs on the S&P going back a full 5 years. All right, so again, here on the S&P, I think we can all agree that over the next few days between the Fed and mega cap earnings, we are going to know one way or the other if this market is going to bust through, get into uncharted territory, price discovery mode, where we could see a melt up in the markets, or is it going to see a rejection? And if it's a rejection, you likely have a major cycle top in place based on these earnings news and obviously the Fed's decision or lack thereof. All right. Next chart we got to go to here, guys, is the NASDAQ composite here. This is a big one because, again, if we look at this trend line here, same trend line as on the S&P, we can clearly see that it comes right up. And look at what we did yesterday, right? So yesterday I looked at the QQQ. The Qs are a little bit different than the NASDAQ. The NASDAQ's a little bit more diversified with companies versus the NASDAQ 100, which is just 100. And you can see the NASDAQ itself here, composite, is coming or has come back here today again with these earnings and the Fed. Do we end up breaking through and surging and actually potentially making a new all-time high? Remember, our all-time high was back in October in the NASDAQ. Now, we've made multiple new all-time highs on the S&P since then, as well as on the Dow Jones Industrial Average, but the NASDAQ has not made a new all-time high since October. Will it get the push today from Meta, Microsoft, and Tesla, and maybe a little extra push from maybe a more dovish Federal Reserve? We're going to find out again later today. All right. Now we get into a few other things, guys. The 10-year yield continues to stay in breakout mode. Now, breakout mode doesn't mean it's surging to the upside. All it means in this situation is that we had this beautiful move up. We were hammering, making a bull flag. We broke out and we confirmed, and now we've retraced, and now you can see us starting to drift higher. And that's exactly what's going on today. We're neutral to positive, but please be ready, because when the Fed reports today and that press conference occurs, we're likely going to see some sort of bigger move in the 10-year yield. And folks, and this is probably the bigger one right now, the dollar. The dollar has been in free fall, absolute free fall here. Let's look at the DXY. The DXY is getting a bounce, finally getting a bounce after it entered a warning zone down here. I'll zoom out on the chart in just a second, but let's talk a little bit about this, guys. Again, a big fall, a fall we haven't seen since the April tariff sell-off low in the dollar. And again, we are getting a technical bounce here, but again, can it recover and can it hold? Now, if we go to our bigger time frame, the reason why this is a zone is it's zone of support going back to the financial crisis lows. And the reason why this is so important, folks, you might say, okay, well, big deal. Like, let's say we start trading down here. What's the big deal with that? The big deal is that in technical analysis, this has held price in check, right? Price has come back to this level multiple times, and it's held and bounced. If you break a trend line like this, right? So let's draw a trend line in and do some TA education. What we know here, and this is basically what the dollar's done, if we break, it's usually not just a tiny break, right? It's just like, it's not like, oh, I just went below the line by a tiny bit, no big deal, let me just kind of stay here or bounce back up. Oftentimes, a majority of the time, when you have a trend line, in this case, that goes back to 2008, so we're talking 14-year trend line, right? If I'm doing that math correct. All right, we're looking at ultimately a major scenario here. And not 14, I apologize, 18-year trend line, right? So we are going back a long way here. And with this breaks, you could be looking at a massive move to the downside in the dollar. And by the way, it makes sense, right? We talked about this in previous game plans, how the more you alienate both countries that aren't our friends and that are our friends, we're going to ultimately see them diversify away from assets that give us control over them. It's very natural, right? It's very natural. So we're going to watch this. Right now, we're getting a bounce. Will that bounce hold as we get into the Federal Reserve, right? As we get into the Federal Reserve meeting and what is said by Jerome Powell. And also, by the way, remember, any day now, and my theory is this, my theory is that President Trump is waiting to announce the Fed replacement until after the meeting today. And I think, again, if Jerome Powell comes out more hawkishly and the markets, let's say, don't like that, he will come out within maybe Friday night. We always see these announcements coming on Friday night, but maybe we will see that announcement coming in the next couple days in regards to the Fed replacement. And that the idea of that would be the hawkishness of Jerome Powell would then be cushioned by maybe the replacement being more dovish or viewed more dovishly by the markets and investors. All right, we're going to turn our attention to earnings. It is earnings time, man. I've got so many charts that I want to show you. I don't even know if I'll get to them all today, but we'll go through them. I'll give you my trading levels as I always do, if there is a trading level available. First one is Texas Instruments. Now, Texas Instruments came out, initially fell. We can see this little dip here, and then it roared higher. Since then, it's starting to fade. This is an interesting case. So Texas Instruments missed earnings, and they missed guidance. But they promised investors that their revenue in the next quarter and the profits will be amazing. And you get my kind of facetious nature here, right? This is interesting because what it's showing us is that investors are willing to believe the hopium. They're willing to say, okay, Texas Instruments, you get a pass on this quarter because you're telling us everything is going to be so good in the next quarter. We'll find out. At certain points, the markets won't give the benefit of the doubt to a Texas Instruments type investment. Right now, they are. The stock is up. Don't be surprised if this fades. It's already fading. I could see it still being flattish on the day. But again, don't be surprised if we end up, maybe flattish in this range on the day. All right. So let's continue to watch that and see where we go. Now, note on this chart on Texas Instruments, it's not one of the charts that was trading at all-time highs. right? If you look at many other semiconductor stocks, and we'll go over some of these, you can see this stock over the last few years has just basically gone up and down and up and down. And so the bar, I think also, even though they missed on earnings and revenue, but then promised good guidance, I think the bar was a little bit lower. We could probably all agree on that because it wasn't in the stratosphere. It's not like it was up 300% in the last 5 months or 6 months versus some of these other stocks. Now, speaking of some of these other stocks, Seagate Technologies, this stock, if we look at the daily, look at this chart. Look at the weekly, in fact. I mean, look at the weekly from April 2025. This was a $63 stock. It's trading at $3.98 on earnings today. Now, earnings were earnings were okay. It was the guidance again. So what we look at here, look at initially here. Initially, Seagate fell after hours on earnings, and then all of a sudden, guidance came out, and it went boom to the upside. But look, this stock is in the stratosphere. I think this could go negative today. I think this one could go negative. If anything, it's going to be up fractionally, in my opinion. But ultimately, again, when you see a stock that has gone up like this on the weekly chart, this massive move, and look at just even going back to January 5th, it was $275. Pre-market, it got to what? 410. Let's take a look. 415, excuse me, 415. These are recipes for sell the news events. All right. So keep that on your radar. Now, another one, ASML. Look at this. They reported earnings overnight. This is a chip stock out of Europe. The stock, again, good earnings. Look, it's already collapsing back down. Why? Look at the daily chart. Look at this daily chart. All right. Incredible. Absolutely insane chart on the daily chart. Look at the weekly chart. Look at this weekly move. Since basically the end of the year, December 29th, this was $1,000. Today, pre-market, it was up to like 1,050 or so, or 1,550, excuse me. That's a 50% move in basically 1 month. That has reversal written all over it, if not today, in the coming days. You know what this reminds me of? It reminds me of Oracle. Oracle here, remember a few quarters ago, we had those amazing earnings numbers and the promise of just incredible backlogs. And look at the chart. Now, I'm not saying this is going to happen to all these charts out there, but just be careful. When you have a vertical move and a gap up on earnings, that's basically what we saw, this massive gap on Oracle, and that was the end of the road, and it came back in. So keep it on your radar. Corning reported earnings. Corning had a big move yesterday, and the earnings just didn't match. It's not down enough to really get me involved in this. I mean, it's down today, but if we look at the daily chart, here's where it closed yesterday. Here's where it's trading, right? So, I mean, it's not a big move on the daily. If this were to fall massively and fill this gap, oh, yeah, of course I'd play it as a long at that point. That would be a no-brainer retrace gap fill. But as of now, it is not doing that, so I'll stay on the sidelines. Here we have a chart of AT&T initially popping, now coming back in. Now, AT&T is flat on the morning session on earnings, but look, this chart's been beaten down. Now, listen, if you zoom out on it, granted, it is still relatively elevated from where it was last April. But the level I'm going to watch for on this, guys, keep an eye on 2270. It is very close. It's only 50 cents away. This is a major gap fill. This is actually the biggest gap in the chart on this chart in a while. And that would, again, fill around 2270. I think that could be a bounce level on AT&T. Starbucks reported earnings here. Nice move on Starbucks, guys. It is starting to come in a little bit, but Starbucks, again, closing yesterday around a 96. It's trading at 101. It's only a 5% move. It's not that big of a move. But again, the bigger question is, if it continues up, where does it look like a short? And I'll give you my level right here. There's a gap fill right here at 106.50. That would be, and this would be a harder one for you guys to see. The big gaps are easy, but you can see price closed here, and then the next day it opened down here. That created this small little gap. Even though the candlesticks are overlapping, still technically this is a gap. This would be a gap fill here because price opened here, closed here one day and opened down here the next, and then it went up. So that would be my first level. The other thing I like to do on these type of plays is do a Fibonacci where you have a very sharp move down. And I just like to see if there's any sort of fib retrace. There isn't really an alignment. The 786 is just above. So that gives me a little more confidence, maybe in a short there, but maybe letting it pierce that gap fill a little bit. But essentially what I'm looking at here is if it were to align pretty much within pennies, then I'd say, okay, now I have a high probability trading setup should Starbucks rally up into that for a day trade, right? All right. So let's go back to other ones. Amphenol here. Big fall on this. This one's had a monster run, closed yesterday at 167, rallied overnight to 172. It's now trading at 145. Now, these are the ones that I like to trade because this is a big move. And by the way, look at the ridiculousness of this chart. Let's get rid of that trend line here. Look at the vertical move. This is very similar to Seagate Technologies. This is very similar to ASML. Major move up on the weekly chart, big pullback here. And I'll show you the level right off the bat here, guys. So again, aggressive traders, look at this. There's a gap right here at 140. So 140 is going to be on my radar. Also, you have a down sloping trend line here. If you connect these highs right through here, that's basically at 139. So there should be some decent support around 139 to 140. This would be a little bit on the higher risk side because even if you zoom out, you can still see how extended it is. But that would be my first level. Secondary level for me, this is a little tougher here. Looking at this chart, let's see here. What about a trend here? Yeah, maybe. I mean, really, honestly, all of this area, 140 to 137. I mean, all of these lines are converging. I like it more and more the more trend lines converge into these levels here. ADP, you can see here, guys, as we are falling a little bit, not a big enough move to get my attention. The ADP chart has kind of been beaten down recently. It is lower here. Trading wise, my first trade level could even be a swing trade down here around 232, classic double bottom. It's about $16 away on a $248 print right now. So that's not percentage wise that big of a move. General Dynamics, nothing going on here, guys. They did report earnings, but again, no major moves on General Dynamics, but just wanted to mention it. Okay, now into Bitcoin. Bitcoin is amazing here. Now listen, look at where it closed below, confirmed the breakdown, scene of the crime, retrace. So there you have it, right? Scene of the crime, retrace. And again, this is classic technical analysis. Doesn't mean it can't get through there, but this is the testing point for Bitcoin. If Bitcoin can start to shine a little bit of a positive light, it needs to break above this line and reconfirm. If it can, I would start to flip more bullish. Right now, I got to remain bearish because that's what the chart is telling me, right? It's just that simple. This right in here is a level of resistance. There will be, I'm sure, people that are shorting this level. I myself am not, but nonetheless, that is resistance here, and it's just above 90,000. We need to see a close above this trend line and then confirmation the next day. We'll keep an eye on that. Now, silver. Silver is basically still intact with the topping tail. So just as a pure technician, and I know there's a lot of silver fans out there, and we all, if you're a silver fan, you want it to keep going up and up and up. That's fine. To do that from a technical perspective, or at least to have probabilities of that, what we need to see is it must close a daily close above this high. The topping tail is basically the wall, and the wall ends, price would be over the wall if you get a daily close above basically 118 on this chart. If it can do that, game on, off to the races, guys. But until then, this candle in technical analysis is the powerful one. This is kind of the dominant one, if you want to call it that. And that means that this is a retrace with favoring to the downside versus upside. And again, this is just TA. This is just classic TA. Has nothing to do with my personal preferences. I still hold a massive position in gold on my longer term side, and I'm loving gold staying strong. So I'd love the metals to just keep going up and up and up. But part of me also says, what is this telling us about our economy? What is this telling us about the financial state of the US and the world? And that's the scarier part. Like, in a weird way, yes, those of us that are long metals and love metals will be fantastic. And by the way, we're going to have Peter Schiff on later today in an interview, and it'll be posted at 5 p.m. And so he's going to give us his insights. But, as much as he and I'm sure, love silver and gold longer term, it also speaks to something fundamentally wrong with the fiat currency system, which to get through that is going to take a lot of pain, regardless of even if you're long gold and silver, it's still going to take a lot of pain because the economic impact is going to be massive. Anyways, I got to get going here, guys, as again, I'm running out of time. But gold today, you can see this thing just keeps blowing through. Look at this. 1, 2, 3, 4, 5, 6, 7 up days in a row. It broke through. Will it confirm above the parallel today? We'll check back in, but great move on gold today, continuing now nearing. It actually pierced 5,300 today on the gold chart. Oil continues to be my favorite right now in a short-term trading scenario. We talked about money flow. I talked about the breakout. You guys know if you tuned in each and every day, I've been bullish on oil since back over here, really. And it just continues. It broke out, retraced, and continuing higher. So far, so good. I continue to be favorable on that. And the natural gas is just, this is the intraday nat gas. It continues to just chop around. Again, nat gas had this huge, crazy pop, filled this area here. It's kind of just been chopping around this level. Nothing really new to report on this chart at this time. But all right, guys, listen, I went over a lot today. I get that. But if the takeaways, these are the takeaways. Watch the dollar and the 10-year yield when the Fed announces and does the press conference later today. For the tech markets, we're watching that NASDAQ and the S&P trend line. We're watching the tech earnings after the bell today. What's going to happen there? That's going to be the kicker. All right, you guys go have a great rest of your day. Thank you so much for being part of Verified Investing. Watch for that Peter Schiff interview dropping at 5 p.m. today for his latest insights on gold and silver, and I'll talk to you soon. Take care.